Armando. This is Ryan with TrendLizard.com. I hope you're doing well. I got the 3 tickers that you had sent me. I'm going to go through them here. We're going to start with XOP, which is the Spider's Oil and Gas Exploration and Production ETF. So I know this is all 3 of these are just updates on previous analyses that I've done for you, but we'll just go through them from the start once again. So the big thing obviously with XOP is that it's been in a massive counter trend pullback that potentially ended at 2016's low and has a really nice advance that's basically doubled the value of the ETF over the course of the last year. So that's a good thing. It's beautiful. It's gone well. It's hit a little bit of a snag lately entering into 2017, but we'll look at that as we get into the shorter time frame. So let's go ahead and zoom in a little bit. This takes a look at the decline that might have finished the overall pullback here, and it does look like a nice completed 5-wave advance. Since then, a really nice advance that actually retraced, just barely touched our yellow resistance area, which is important because the lower end of this yellow resistance area is actually a Fibonacci number. It's a 38.2% retracement. So this recovery here retraced 38.2% of this down leg here. So it's interesting that it touched it and reversed. It gives me a little bit of a pause what's going on here, this pullback. The key, if this thing is going to continue much higher, is that it needs to be a trendy move, obviously. If it proves to be anything other than a trendy move, then it could only mean that this downtrend is not yet over. So that's what we're looking at. It's again, it's turned down recently, and that could be problematic if it continues in that direction, and I'll show you why. So here we're going to zoom in on the advance off the 2016 low. That's what this is here. This is the exact same labeling that I showed you previously, and I had indicated that the first leg of the advance appeared to end in September. There was a pullback. It ended up being a pretty small pullback. From there, XOP broke out again, but since then it's faded, which is a bummer. So if it trades below 37.50, it's going to be worrisome. It's going to look like a more important high is in. It could mean that this entire advance is a counter trend move and not the resumption of any larger uptrend. Obviously, that would be a concern. But I'm trying to figure out other ways that we could label this with different Elliott wave labelings where it could, where this could still be a trendy move. And even if we do so, at 37.50, a move below that level is going to be a warning sign, and I'll show you why. So even if this wasn't the completion of the first up leg, let's say that it actually completed like so. Let's say it actually just completed in December and is now starting a larger pullback. This labeling doesn't look right, but it could work. It would leave the trendy nature of this advance off the 2016 low intact, but it would portend an even larger pullback that could head all the way basically down to 30 from here. So if you own it, and even if it is a bullish overall outlook, a move below 37.50 would still look like a bearish event. So I would be concerned with a move below 37.50. If you own it right now, I would still use 37.50 as a stop, and I would exit just because it would open up a larger pullback, either as a larger counter trend pullback or potentially something more bearish where this thing just turns down and retraces this entire advance. Whatever the case may be, a move below 37.50 opens the door to a lot of trouble, and I just wouldn't want to hang out to see what that trouble is if you owned it. If you don't own it, again, you'd obviously want to use 37.50 as kind of your guide, and if it turns back up from here and continues, well then that looks like a pretty bullish deal that can be bought and would look pretty good from there. You could buy it around 44, somewhere like that. I would want to see it retrace a good portion of this pullback before I would get real excited about it again. But if you do own it, use 37.50 as a stop, and hopefully it doesn't get broken, because if it does, it opens up the door to a much larger pullback from there. So I hope that's helpful. I'll get to the next one in just a minute. Thanks.